Hello, my name is Luke Taylor, one of the partners here at Smales Goldie Group, and in this video we're going to be looking at some of the recent updates to the coronavirus job retention scheme. So the government is taking unprecedented steps to help businesses with their finances during these challenging times and has delivered an economic stimulus package worth hundreds of billions of pounds. One of the most significant measures introduced is the job retention scheme, which promises to support employees who are furloughed by paying a proportion of their wages, freeing up money for businesses to help them with their cash flow. There remains a lot of confusion and uncertainty around this new scheme, and so to help you to get to grips with the landmark policy, we've decided to answer some of the key queries we've received so far from our clients. Firstly, what does the scheme offer? The Coronavirus Job Retention Scheme is a temporary scheme open to all UK employers until at least the 30th of June 2020. It is designed to support employers whose operations have been severely affected by the COVID-19 pandemic. Employers can use a portal to claim for 80% of furloughed employees' usual monthly wage costs, up to £2,500 a month, plus the associated employer national insurance contributions and minimum automatic enrolment employer pension contributions on that wage. So is my business eligible? Any UK organisation with employees can apply for the scheme, including businesses, charities, recruitment agencies, and under certain circumstances, public authorities. However, you must have created and started a pay-as-you-earn payroll scheme on or before 28th of February 2020 and have a UK bank account to access the scheme. Let's look at which employees can benefit from the scheme. The scheme applies to employees on a leave of absence, referred to as furloughed workers. These are employees who are on the payroll but who might normally be laid off or made redundant due to a lack of work. To be eligible for the scheme, an employee must have been on the employer's pay-as-you-earn payroll on or before the 19th of March 2020, and HM Revenue Customs must have been notified of a payment through real-time information by that date. This scheme covers full-time employees, part-time employees, employees on agency contracts, and employees on flexible or zero-hour contracts. To be eligible for the subsidy, an employee must not undertake work for or on behalf of the organisation. This includes providing services or generating revenue. However, they can undertake other voluntary work or do training as long as it does not generate income for their business. What about workers whose pay varies monthly? If the employee has been employed for a full 12 months prior to the claim, you can claim for the higher of either the same month's earnings from the previous year or the average monthly earnings from the 2019-20 tax year. If the employee has been employed for less than a year, you can claim for an average of their monthly earnings since they started work. Those who started in February should have their pay calculated on a pro rata basis. As an employer, it is your responsibility to calculate how much of the employee's salary you can claim for, including the amount of employer national insurance contributions and the minimum automatic enrolment employer pension contributions you are entitled to. So does the scheme apply to directors? The answer is yes. Directors of a company can be furloughed. The guidance provides an exemption for company directors who are also furloughed employees to carry out duties such as filing of company accounts or provision of other information relating to the administration of the director's company. This would include company's house submissions and other statutory duties. During this period, directors should be careful to avoid anything that could be mistaken for work, including posting promotional material on their own social media feeds. We operate in the public sector. How does the Coronavirus Job Retention Scheme apply to IR35? The government has provided detailed information about how the Coronavirus Job Retention Scheme will work for contractors working within the scope of the IR35 off-payroll working rules in the public sector. The guidance states that it may be appropriate to furlough IR35 contractors that are deemed employees in a small number of cases. The public sector organisation would then have to confirm this with both the contractor's personal service company and the fee payer, and agree between the parties that the contractor will not carry out work for the organisation during the period of furlough. The fee payer, usually the agency that pays the personal service company, will have to apply for a furlough payment of 80% of the monthly contract up to the £2,500 cap and the national insurance contributions. The fee payer will then need to pay the furlough payment in respect of wages to the personal service company via pay-as-you-earn and make the necessary tax and national insurance contribution deductions. The personal service company will have to report the payment to the contractor as deemed employment income via pay-as-you-earn using box 58A on the pay-as-you-earn real-time information return. If a contractor opts to furlough themselves as an employee or director of their personal service company, and they are still receiving income from a public sector organisation, including through the Coronavirus Job Retention Scheme, they must deduct this income from their reference pay for the Coronavirus Job Retention Scheme. So, what if I've already made a member of staff redundant? Can they benefit from this scheme? Anyone on an employer's payroll on the 28th of February 2020 and notified to HMRC on an RTI submission on or before that date who stopped working for their employer prior to the 19th of March 2020 can be re-employed and furloughed, including those who left the business voluntarily. Additionally, new employers since the 19th of March 2020 can claim under the Job Retention Scheme if either the TUPE or pay-as-you-earn business succession rules apply to the change of ownership of the business. Groups of companies that have consolidated their payrolls into a new pay-as-you-earn scheme after the 19th of March 2020 can also furlough employees and claim under the Job Retention Scheme. What about performance-related pay? Unfortunately, the scheme does not cover uncontracted fees, commission and bonuses, but an employer can continue to pay these separately if they wish. Now let's take a look at statutory sick pay. Employees who are currently off sick can be furloughed for business reasons and moved from statutory sick pay to furlough pay. Employers have discretion as to whether to furlough those on long-term sick leave or continue to pay them statutory sick pay. If an employee becomes sick while furloughed, it is up to the employer whether to leave them on furlough or to move them to statutory sick pay. Furlough cannot be claimed at the same time as statutory sick pay. Employees who are shielding in line with public health requirements or who are staying at home with someone who is shielding can now be furloughed. So what about maternity pay and shared parental leave? Those who are contractually obliged to enhanced maternity, adoption or shared parental pay are eligible for the scheme, but not those on statutory maternity pay. They will be paid in the same way and cannot be additionally furloughed. What if I've had to reduce the hours of some staff members? Can I use the scheme to make up the difference? If an employee is working but on reduced hours or for reduced pay, they will not be eligible for the scheme, and you will have to continue paying the employee through your payroll and pay their salary subject to the terms of the employment contract you agreed. How do I make a claim for the scheme, and what information do I need? Before making a claim, it is important that employers communicate changes with staff. Employers should discuss with their staff and make any changes to the employment contract by agreement. In order to evidence this change, employees should be asked to sign a written agreement confirming that the employee will cease all work in relation to their employment. Where a business or organisation is furloughing a large workforce, a consultation may need to be done on a collective basis. The employer must then submit the following information to HMRC via the dedicated portal, which opened on the 20th of April. The employer pay-as-you-earn reference number, the number of employees being furloughed, national insurance numbers for each employee, the names of each employee, payroll/work number for each employee, the business's self-assessment unique taxpayer reference or corporation tax unique taxpayer reference or company registration number, the claim period, start and end date, the amount claimed per the minimum length of furloughing of 3 consecutive weeks, your bank account number and sort code, your contact name and your contact phone number. You can only submit one claim at least every 3 weeks, this being the minimum length an employee can be furloughed for, and these can be backdated until the 1st of March. Existing employment law continues to apply and should be carefully considered when changing an employee's status so as not to discriminate. So, how will I receive funding via the scheme? Once HMRC has received your claim and determined that you are eligible for the grant, they will pay it via BACS payment to a UK bank account that you have provided. A claim should be made in accordance with actual payroll amounts at the point at which you run your payroll, or, in advance of an imminent payroll. You must pay the employee all of the grant you receive for their gross pay. No fees can be deducted from the money that is granted. As of the 22nd of April, initial claims have been made and are expected to be paid out within 10 working days of the claim being submitted. Our payroll team at Smales Goldie is here to help our existing payroll clients with the administration of the scheme and can help you to collate and submit the records required to make your claim. We understand that certain elements of this scheme are complex and require careful calculations, so please feel free to contact us today to see how we can help you and your business. Finally, thank you for taking the time to watch this video.